Welcome to the Deep Dive. Today, we're digging into the Wyoming Commercial Real Estate Report for November 2025.
Yeah.
And when you read this, you see a state that's facing this really profound economic split. It's a clash of hyperscale tech, extreme wealth, and, the legacy energy markets.
Right. It's hard to score those things.
It really is. Okay, let's unpack this.
The dichotomy is the whole story. I mean, Wyoming's big advantage has always been its tax structure, no income or corporate tax.
Magnet.
Exactly. It's a magnet for capital. But that creates a fundamentally bifurcated economy. These markets are like strangers to each other. So to really understand it, you have to look at three very distinct zones.
And the place to start, I think, is Cheyenne. The headline there is that it's just completely decoupled from the state's traditional economy. This is the birth of the Silicon Range.
Precisely.
Yeah.
The scale of the hyperscale data center boom there is it's breathtaking. You have Related Digital deploying a $1.2 billion 302 megawatt campus.
Wow.
And it's already getting filled up. CoreWeave, an AI cloud provider, has already anchored 88 megawatts of that.
So the key asset isn't really the land anymore.
Not at all. Power is the new real estate asset. That's the key insight here. We're seeing proposals like from Crusoe and Tallgrass for 1.8 gigawatts of power. The land is almost an afterthought to the electricity needed.
But wait, when you have that much construction going on, aren't you just creating the same old boomtown squeeze? What are the second-order effects of that?
Oh, absolutely. I mean, you look at the raw numbers, that one project needs 700 construction workers.
Right.
That creates an instant on massive housing shock.
Right.
It's tightening up every available Class B and C apartment, every old motel. So the immediate value-add play, if you're an investor, is just buying up those assets for corporate housing for the data center contractors.
Okay, so from Cheyenne's digital factories, we pivot to the complete opposite, Jackson Hole. Here, we're not talking megawatts, we're talking millions.
And this is where the market gets truly strange.
I mean, Jackson is a place where $10 million is the new entry point, but the person serving you coffee has to drive in from Idaho. How is that sustainable?
It's a hyper-luxury microeconomy, and it's almost totally insulated from interest rates. Sales of homes over $10 million were up 82% year over year.
82%.
And almost 70% of those were cash deals. But this creates a huge commercial risk, the workforce crisis. There are literally zero homes listed for under $1 million in Teton County.
Zero.
So your essential businesses, they have to move out to Star Valley or even Idaho just to find employees.
So let's turn to the industrial heartland then, Casper and Gillette. Is that the old boom and bust cycle playing out again?
You'd think so, but this time it's different. It's more of a quiet stability. Oil production is flat, forecast to stay below $65 a barrel, which suggests the right sizing is already done. No frenzy, but no collapse either.
And the state itself is in good shape.
Very good shape. The rainy day fund is over $1.5 billion. That fiscal health gives people confidence.
And Casper is using that stability to try and diversify, right?
Mm-hmm.
Pivoting to the so-called experience economy.
They are. You see it with the new Wyo Sports Ranch, which is 131,000 square feet, and the new Hyatt Place opening up. That shows national brands have confidence.
But there's a warning sign in the report.
A big one. Despite all the state surpluses, local retail is hurting. Sales tax collections in the retail sector fell 4.4% statewide. That shift to online spending is really hitting the mining counties hard.
So if we put it all together, Cheyenne's power, Jackson's wealth, and the heartland stability, what does this mean for you, the learner? What's the strategy for 2026?
The forecast for 2026 is all about infrastructure alpha. The state's fiscal health provides safety, sure, but the highest returns will come from solving these bottlenecks.
Like power and housing.
Exactly.
Yeah.
The single most immediate profitable play is still that construction housing strategy in Cheyenne, buying up those Class C assets for the data center crews.
So we've basically established that the lack of workforce housing is the hard cap on growth across the entire state.
Correct. But here's the final thought to leave you with. Does this rapid, stark split in Wyoming's economy tech hub over here, billionaire retreat over there, eventually force a political crisis?
A crisis that could challenge the very tax structure that brought all the money in to begin with.
That's the question. For a long-term investor, you have to ask yourself, will the housing crisis force a tax rethink? That's the regulatory risk you need to be mulling over.